In Part 3 of Income Tax Updates for the month of July 14, we will discuss one of the important clarification regarding taxation of alternate investment funds. Clarification regarding taxation of alternate investment funds having status of non-charitable trust under the Income Tax Act 1961, Circular number 13/2014, dated 28 July 2014. The SEBI Regulation 2012 by Regulation number 4 issued in May 2012 aimed at regulating all form of private pool of funds in India. The said regulation divides the alternate investment funds into three broad categories: Category 1, 2 and Category 3 of alternate investment funds. Depending upon the operational strategies, objectives and fund structure, a large number of alternate investment funds registered with SEBI have been set up in the form of non-charitable trust. While the AIF, being venture capital funds making investment in the venture capital undertaking, have been accorded tax pass-through status under Section 10, subsection 23(f)(b), read with Section 1150 of the Income Tax Act 1961, whereby income arising in the hands of such fund would be treated as tax exempt, while the investor of the such fund would become liable to tax liability on as if the investor have made the investment directly in the venture capital undertaking. Clarification has been sought about tax treatment in cases of AIF being non-charitable trust where the investor's name and the beneficial interest are not explicitly known on the date of its creation. Such information becoming available only when the funds start accepting contribution from the investors. Board has been requested to clarify whether the income of such fund would be taxable in the hands of trustees of AIF in the capacity of representative assessee or in the hand of investors. The matter has been examined in the situation where the trust deed either does not name the investors or does not specify their beneficial interest. Provision of subsection 1 of section 164 would come into play, and the entire income of the fund shall become liable to be taxed at maximum marginal rate of the income tax in the hand of the trustee of such AIF in their capacity as representative assessee. It is also clarified that in such cases provisions of section 166 of the Act need not to be invoked in the hand of the investor, as corresponding income has already been taxed in the hand of representative assessee in accordance with subsection 1 of section 164 of the Act. However, in cases of funds where names of beneficiaries and their interests in the funds are determined, means stated in the trust deed, and the tax on whole of the income of the fund consisting of or including profit and gains of business would be leviable upon the trustees of such AIF being representative assessee at the maximum marginal rate in accordance with subsection 1A of section 161 of the Act. The clarification given above shall not be operative in the area falling in the jurisdiction of High Court, which has taken or takes a contrary decision on the issue. Presentation is useful and informative for you. If you have any other queries or questions, you can simply ask us through phone or mail or comment. You can also suggest us some other topic for discussion. Your feedback and suggestion are valuable for us. Thanks.